Yes, sir. It's your boy B Hayes. We back with another one, guys. So let's go and jump right into it. Before we do that, watch out for spam, WhatsApp in the comments down below. Also, feel free to join VIP to be alerted whenever we get in and out of these plays. Also, get your free stock from down below. So let's go ahead and take a look at it, guys. So as we know, guys, the Dow is falling more than 300 points as Wall Street heads from a back-to-back weekly decline. So stocks were lower Friday as investors continue to sell into the year end on fears of a recession is head, which is already here next year because of Federal Reserve's unrelenting rate hiking. So as we know, guys, we had heard exactly what we need to hear whenever the Feds came out and hiked interest rates this month. We already knew it was anticipating on being less aggressive than the past. The past, they hiked interest rate by 3/4 of a percentage point. This time they only did it by 0.5 percentage point. So we see that, inflation is coming down, common sense. These businesses is panicking, things is getting cheaper. They need revenue. So with that being said, the consumer is now having the upper hand. It's a unique time. So anyways, let's go ahead and take a further look at what's going on, guys. So as we can see, the main thing that I wanted to bring to you guys' attention is you got to pay attention to the options market, options activity. How many contracts, is it a crazy amount of contracts that's being taken out on call options and certain securities and assets like AMC, Carvana, you name it, Tilray. A lot of these stocks was already building up crazy anticipation of spiking. Some of them already did a little preview and spike, fairly well just to come right back down and bleed slowly before the next spike. And the reason it's stalling out and taking a while for the stock to actually, do what it's intended to do is because the option market. Most people don't realize that option activity has a major role to do with how these stocks consolidate, whether they stay stagnant, how they spike or whatnot. If it's too much money in the option trading realm, they're definitely going to try and hold it back and manipulate the stock even further and try and make sure most of those option contracts expire worthless. That's the whole, key of the market, obviously. There's not going to have, millions of people just making, crazy buttloads of money, right? And so that's my psychology of it anyway. I'm pretty sure it works that way. If the majority money is on one side, the market is going to do the opposite. If the majority of the money is on the other side, the market is going to do the opposite. Meaning if it's way too many shorts, we usually will see a spike. And if it's way too many people going long, we usually see a decline, right? That's kind of how the market psychology work, guys. That's why I always can't stress enough. Aim small, miss small. Whenever you aim small in these plays, 9 times out of 10, try it. You're gonna see it's gonna be a winning trade, not 8 times out of 10, especially if you bought it with the right characteristics and making sure everything's checking off with the volume, with the first green day, or whatever strategy or tactic that got you interested in that stock. So as we can see, guys, right here, I'm gonna tell you guys exactly what's going on today, why it's so sloppy, why it's dragging, because the day is really one of those historical days. So many people had money, put on the line for calls, being for the fact that they knew from common sense that the market should actually be running right now due to the fact that inflation coming down, interest rates is less, they being less aggressive with hiking interest rates. That's a combination for a positive market. The opposite is the opposite of that is a demonstration of a negative market. So as we can see right here, guys, there are 2.6 trillion worth of index options set to expire on today. That's why, it's hard trying to do everything they can to hold this market back from running because there's so many options that would expire worthless, right? This is the highest amount relatively to the size of the equity market in nearly 2 years, guys, according to Goldman Sachs. So that's huge. That's a real factor that, you need to take up out of what's going on to see why this Friday is being so dull. So the sell-off was broad-based with just 18 names in the S&P 500 trading in positive territory. The real estate and energy sectors were the biggest, down 3% and nearly 2% respectively. So we see exactly what's going on with that, guys. Also, like we know, whenever good news come or they say some good news, the Feds, they ain't want to just say good news, and they know what the outcome of the market is going to be. Whenever they say certain stuff, he always try to come back with a but if or this could happen too, or to try and put some type of mixed signals on the market instead of one clear signal and sending it a certain way, right? So if you pay attention, the excitement continue whenever the stocks has been riding high this month on weaker than expected inflation and a number stronger than expected reports on the broad economy and the job market. But the excitement continued right up until Fed Chair Jerome Powell crashed Wall Street's party Wednesday with some tough news. Economics at the Fed believe U.S. gross domestic product, the broadest measure of America's economy, will barely grow next year. So, that's what basically put fear into the market, saying that we will barely see any growth in the economy on next year. Of course, the stock market isn't going to like that. And they predict that the U.S. unemployment rate will rise by 4.6% by the end of 2023. So you see how they, give you something good. Yeah, inflation coming down, interest rates, we became less aggressive. But next year, the economy is going to slow up. It's not going to grow. It's going to grow. It's not really going to grow at all next year. That's what they say. And Blase and the employment rate is going to go up 4.6%. That's that little spike that they're going to throw out there and try, shake up the market, give the mixed signals. But as you know, guys, at any time now, investing and holding quality companies at this level is definitely, a great thing to be doing, because even though we can project and see that the market could possibly go lower from here, it ain't too much more they could do, guys. It ain't too much more they could do. Towards the end of this year, at the last beginning stages of this month and the beginning of next month, I'm pretty sure, we about to see some wild action with the stock market. This is not going to be too much more sustainable, guys. These millionaires, billionaires, even retail investors, they see the golden opportunity that's in the market right now. I'm talking about people going to be able to turn, their money around 300, 400% in a short time frame, especially if they, looking at the right quality companies that's down over 97, 98%, some in the tech sector, so it's going to be a lot of opportunity, guys. So you already know what to do. Add your boy on Instagram at the B Hayes Show. Get in VIP. Love y'all. We out. And God bless you.